and we are headed into a long holiday weekend as well next week, where markets will be closed not tomorrow, but next Monday for the Labor Day holiday. We're going to start off looking at the 5-minute chart of the S&P 500. And one more thing about this week coming up. It's September week 1, but we still have August, the month of August, on Monday, Tuesday, and Wednesday. However, things that trade on Monday are going to settle in August. Things that trade on Tuesday and Wednesday are going to actually settle in September. I'm talking about stocks, securities that need time to settlement. So we might see a change in behavior between what happens on Monday and what happens Tuesday and Wednesday. So be prepared for that. So let's talk, once again, let's go back to this intraday chart of the S&P 500. Here's what we opened on Friday as we awaited Powell's speech from Jackson Hole. You can see that once the speech remarks were released, we began to sink. We turned and tried to recover that, in the next candle as he began to speak, and then the market just digested that, made a little bit higher high on the day, and then rolled over from there. This circle here is where I left you on Friday. We had set an initial low of the day down here, resolving an out-of-range low that had been set on ES overnight, one of the nights this week, that was out of the range of any of the lows we had set all week in regular trading hours. So we resolved that perfectly with a little look below it, and we were trying to reverse. And when I left you, I thought maybe this reversal was going to try to gain its way back here into the initial balance range, where you would get an amazing chance to buy puts, and we would roll over from there and sell off the rest of the day. But we never were able to really make it out of this area of around 41.25. We kind of got stuck there. 41.25 is where a gap back to August 9th finally filled, the one going into the CPI data. And then just above that is this big closing level at 41.30 to 32, where the April, May, and July closes all kind of settled in from 41.30 to 41.32. So this seems to be the wall of resistance for the moment, and we rolled over from here. And by the end of the day, we had broken down to a new low for the month. We had filled this gap to the July 28th close at the end of July, and we broke down below the 100-day and closed the week below it, breaking down all the way to 40.57 for a low, a new low for August, right into the close, as a matter of fact. So we're sitting here at 40.50, an important 80 handle rule. And if we can't hold on to 40.50, we're going to go to 4,000. So let's take a look at the roadmap. If we can't hold 4,000, then we are going to go down here to the 50-day, which is just below 4,000, and just below that is 39.81. 39.81 is the halfway back to the whole summer range. The low from June, which is the current low for the year, to the bounce high off of that low in August, halfway back point is 39.81. So we're playing out our 80 handle rule. If we can't hold 4,000 and the 50-day, we're going to go to 39.80. And if 39.80 doesn't hold, we go to 39.50. There was some consolidation you can see back here at the end of July around the 39.50 mark. I think that probably holds us tomorrow if we continue this sell-off and we try to bounce Monday and Tuesday, Tuesday, Wednesday, trying to get back above the 50-day to close the month of August above that. We'll see. If all of this fails and we head a little bit lower, we have an uptrend here coming off of that June low that would bring us down here to maybe test the June halfway back. But I've been saying for a while now that I think 39.50 is really going to be the important line in the sand and the area that we hold. This uptrend, in fact, if we kind of sell off down to here and just chop for a couple of weeks, this uptrend rises above 39.50 starting at around September 16th. So that could be a play there where we just sort of like chop for a couple of weeks back and forth between the 100-day and the 50-day, maybe dipping down here to 39.50 and holding that as our low and then taking off from there. Around mid-September, as we see short covering ahead of the next set of earnings that come out in October. If we just have a vicious bounce off of this, we're going to be coming back up here towards the 100-day, and then we're going to start getting into the range of Friday. This is going to probably be a key element here for us to trade against for a while until we take it out and rise above where our highs topped off on Thursday and Friday of the week we just traded. The halfway back point of the week looks like it falls dead on here with this important closing level. And once we get above that, then we have our 10 and our 20-day simple moving averages. But I think tomorrow we're probably going to see another leg of the selling on down here to the 50-day, 39.81, and as deep and at the deepest, maybe 39.50. Okay, so if we look at this in a little bit closer version of the roadmap, you can see what I'm talking about a little bit more clearly. And that's it. I don't really think there's much more to say. We've been waiting for this sell-off to the 100-day as target 1 and target 2, the 50-day, maybe a little lower than the 50-day to 39.50. We've been waiting for this since the beginning of August when I said to you, a note came up in my calendar stating that be careful that the last 2 weeks of August can really erase everything you've gained so far over the summer. That it tends to be a little bit of a surprise and a rug pull. And sure enough, here we are. We really got that rug pull on Friday. But this could just be, the end of the week, overreaction to Powell's speech, maybe one more leg lower, and then turn around and try to move back up. But this 41.25 to 41.32 level is going to be very key for us to try and move back above once we do finally flesh out what our low is going to be and we start getting a bounce going. Okay, I hope that helps you out. Have a great rest of your Sunday. Good luck and good trading.